Holy smokers, that ain't no dang jokers. Check that out. Public count sitting almost at $4.1 million. Public count up another $21,000 plus here today, and that's despite the S&P 500, the Qs, and AMD all being red. At the beginning of this video, obviously the public count's been red hot. This portfolio was around $1 million 3 years ago. Now to be pushing close to 4.1 mil, what an achievement, right? Listen, I've been hot. My stocks have been hot. My portfolio's been hot. I want to talk about managing the emotions of this. I'm sure there's a lot of people watching this video right now, and congratulations to you guys that have made thousands of dollars, tens of thousands of dollars, hundreds of thousands of dollars, or millions of dollars just in the past 6 months. I'm not talking about the past 6 years, the last 60 years. I'm talking just in the last 6 months. There's a lot of you guys watching it right now that have done that, right? Congratulations first off. Second off, I want to talk about managing the emotions of that and how to make something like that sustainable, where it doesn't feel like you're just gambling out there and you'll win at the casino or something like that, okay? From there, what I want to go ahead and do is I'm going to show you guys my entire potential hedges watch list, like stocks I'm looking to bet against or I am currently betting against, essentially. And we'll talk about that. We'll talk about a stock that went down big here today and my thoughts around that and those sorts of things as well in this video here today. From there, I want to react to this. Tom Lee was just on CNBC about an hour and a half, maybe 2 hours ago or so. I want to go ahead and react to his latest commentary on where he sees the market headed from here and share my opinions and perspectives. And then the last thing we'll get into in this video here today is a move I made here today, why I went ahead and did it, what the potential upside is in that move, and all those sorts of things. So we got a lot to go through. One thing and one thing only I need from you guys, if you could please just hit that thumbs up button. If you could make that thumbs up button glow on this video, that would mean the world to me. Everybody that's already done that, thank you so much. Additionally, if you want to see more of my videos in the future, make sure you're subscribed to the channel. Here's the deal. If you're not subscribed, YouTube's going to have less of a probability of showing you my videos in the future. If you're subscribed, there's a greater probability YouTube will show you my videos in the future. So if you enjoy my content, you want to continue to learn from me, hear the stocks I'm talking about, my perspectives on the market, make sure you're subscribed to the channel, okay? Alrighty, guys. So first off here, public count's been red hot. Unbelievable, right? Been red hot in general. How do you handle the emotions of that? How do you make something like this sustainable, right? Listen. In order to make anything sustainable in life, you have to take it out of a context of like, I'm getting lucky with this, and have a strategy, have a plan to continue to execute on something so it doesn't feel like luck, right? I'm sure there's plenty of people watching this video right now that, you haven't even researched companies. You don't know what you're looking at. You don't know how to run projections on companies, but you probably made a lot of money in the last 6 months, 9 months, year, 2 years, right? By just kind of throwing some money out there. Maybe you've been watching my videos, hearing the stocks I talk about, right? And you just kind of got lucky, right? You maybe bought a couple of my stocks and they went up a bunch, and next thing you know, you made thousands, tens of thousands, hundreds of thousands, or millions of dollars. And I bet you there's a lot of people watching this video right now that did exactly that. You didn't really do any research, and no, watching my YouTube videos, just hearing me talk about the stocks is not your research, okay? You didn't do any work on your own, and you're sitting in a situation now where you probably made a ton of money, and you're like, all right, man, I don't know how to keep this going, right? And so we've got to create a sustainable strategy that is outside of just getting lucky, right? Of, trying to watch somebody on YouTube or CNBC or Bloomberg or whatever and just gambling some money out there and hoping you win, right? And this goes back to a point I was making in yesterday's video on the main channel around, people will spend so much time and thought into, a small expense. They'll go so out of their way to save, 20 cents on a soda, but yet it comes to actually putting in some effort and work into their investments, and they'll just put such little amount of time. And it's like, dude, this is your life savings. Like, this is your net worth. Why are you putting in such a small amount of work, right? Yesterday was a big day for the public count, closing over $4 million. Guess what I was doing last night? I was putting in the work. I was running projections. I was looking at market commentary. I was looking at some Fed-related stuff last night. At the end of the day, like, that's how you stay successful over time. You got to continue to put in the work. You can't just, get lazy like that. You get lazy results over time. Short term, anything can happen. Short term, over a 6-12 month span, you can get lucky doing this, doing that. But I can tell you, if you don't really actually put in the work, you don't understand all this stuff, it's going to come back to bite you in a massive way. And it doesn't come back to bite you when you're in a roaring bull market. It comes back to bite you when you start to get in a kangaroo market that's up and down and going nowhere. And then it comes back to really bite you in a bear market. And next thing you know, you end up losing all your gains. Because if you've been, as a human, if you've been taught I can get lucky by just throwing some money in some stocks without really researching them in depth at all, running my own projections and things like that. Why would you stop? You wouldn't. You would do it on the next one and next one and next one, right? And that second one or that third one or that fourth one can come back to bite you. Next thing you know, you'll have lost all your gains, plus you'll lose a bunch of money you had initially invested. That's what ends up happening if you don't know what you're doing in this game. So make sure you're creating a sustainable plan, right? Just yesterday was a big day. I ended up signing up 8 people. 8 people in my private stock group hit 7 figures plus in their portfolios. Unbelievable number, obviously, right? Those people are not just counting on getting lucky in the market and just like gambling money around. They have sustainable strategies. They go through all my course curriculums. They use 1000xstocks.com. They run their projections and they build and they build and they build. And I'm sure in the future that a lot of those individuals will be at $2 million, $5 million, $10 million in their portfolio, right? Do you want to be a real player or do you want to be a fake player? It's up to you. You want to be a gambler or you want to be an investor? It's up to you. Those are your own decisions, right? Pin comment down there. Get access inside my private stock group, access to all his course curriculums, access to teach you this stuff on a high level, access to 1000xstocks.com. And don't let your emotions get the best of you in this game. Because if you let the emotions get the best of you in this game, you just got to be stoic, play it through, like understand what you're actually doing. And that allows you not to get emotional about this stuff, right? I understand in the future, there's going to be where day after day after day, the public count just goes down, right? And it's going to be a tough situation next bear market. That happens every bear market. And guess what? I'll be unfazed. Just like last night, hitting $4 million plus in the portfolio, I was unfazed. Today, the portfolio hits a new all-time high. I'm unfazed, right? Like, I could make, $100,000, $200,000. Monday alone, I was probably up a Ferrari, unfazed. That's just the name of the game in regards to this, right? We're not playing this for fun. We're playing this for keeps, right? Now, let's talk about my potential hedges watch list here. And, some stocks I might bet against and what I've been thinking about here, okay? Listen, there's a stock that's been on my potential hedges list here for a bit that I haven't bet against. I'm very upset I haven't, and it's Ferrari. Ticker symbol RACE on this one. Now, when it comes to Ferrari, obviously we all know very successful brand, right? Incredible. But at the end of the day, like the valuation on the stock has gotten very high over time. So let me go ahead and show you just how high this valuation's really gotten here recently and why I've been thinking about betting against Ferrari, and I'm so mad I didn't because I just missed a massive opportunity to make a lot of money. If we look at the trailing 12-month P and the forward P, gosh, 39 and 38, very high. Problem is the 2-year forward P is roughly in that range as well, which means there's a potential here with Ferrari where they might not get a lot of profitability expansion over the next few years. So I want to go ahead, I want to show you back to the charts feature. I want to show you another issue here with Ferrari and what they're kind of working against here. So when it comes to Ferrari, this company's been firing on all cylinders, in terms of their financials for the last several years. And it's been amazing, right? They've had phenomenal growth, a lot of double-digit growth on a year-over-year basis. And you look at their numbers, they're incredible. Look at their margins, right? They've been up very nicely. Look at their earnings per share trend. This is what analysts are expecting here. But we have a problem with Ferrari. And it really has nothing to do, look at the shares outstanding been going down. This is phenomenal across the board, right? But the issue with Ferrari has nothing with what's been going on at Ferrari for the last few years. The problem with Ferrari is what might happen over the next few years. Because you got to understand, for somebody like Ferrari, they're always counting on selling the new cars to the next bunch of individuals or the same bunch of individuals, right? But the issue is, and I'm in the Ferrari community now because I bought a Ferrari last year, right? I got to tell you guys, the commentary around the new models have been horrible. This is like their new flagship car that they showed off, right? Supposed to be so exciting, the F80. Like, oh my gosh. Like, at the end of the day, like, I looked at the commentary out there around this car, and it's horrible in regards to the look of the car. Additionally, being a V6 powertrain, like, people are like, what, a V6? And this is the flagship car? What are we talking about here? So people don't like the way it looks. People think it looks like a Lego car. People don't like the V6 thing, and so it just brings a lot of negativity around the brand here, okay? Additionally, just last month, they showed off their 849 Testarossa, which was a play on kind of the, very nostalgic Ferrari Testarossa that came out. I think that was back in, when did the original Testarossa come out? I think that was back in the late 80s, I want to say. Mid to late 80s, if I recall. But I remember like there was two cars when I was a little kid that were kind of like dream cars. One was a Ferrari Testarossa and the other was a Lamborghini Diablo. Like those were just two like such iconic cars when I was a little kid, essentially, right? But, they showed off this car, and this one didn't hit it either. A lot of people didn't like the way this one looked. They thought it looked just didn't get you excited. Like you saw it, and it's like, wait, this is a Testarossa? Like this is a play on this like historic car? So that has a lot of, kind of negative vibes around it as well. They also keep putting in like these electric motors, which people are not into. Like, they also keep taming down how the engines sound. Like people want these cars to be loud. They want them to be loud and proud. They want them to sound like just insane. And so they keep kind of sounding worse. They're putting in these, partial EVs. And people are just like, they don't want that. And they keep trying to focus on just trying to make it as fast as possible. But yet people love a fast car, but it's just like at some point it doesn't make that much of a difference between, going 0 to 60 and 2.9 seconds or 2.4 seconds. It's just fast, right? So that's all going on, and it's just leading to a lot of negativity around the brand, and this is also ultimately ends up leading into sales problems, right? Where people like I had a potential within minutes of this vehicle coming out, I got a text from Ferrari Las Vegas, and listen, they wanted to get me down on that list, get me ready to buy one of these, right? And I looked at the car, and I'm like, I don't even know how much this is actually going to be. And I was like, no, there's actually some older Ferrari models I actually want more than this one that I would actually rather have. So at the end of the day, like this leads to a potential problem coming with Ferrari sales down the road and a potential problem with growth rates, right? Now, if the stock starts going down and you start having some sales numbers be a little weaker, what's going to end up happening is you're going to start getting a lot of people talking about this on social media, a lot of YouTube videos, Instagram videos, TikTok videos, things like that, right? That's like a very popular genre of people like, talking about the end of this brand and like the decline of blah, blah, blah company, right? I've seen it with every stock that goes down big, it seems like that happens nowadays, or every company that goes bankrupt or just has some financial troubles, and these things get millions of views. And so this is going to likely end up happening with Ferrari over this next bit of time. If this stock continues to trouble and then the numbers start getting a little, weakening, you'll end up being in a situation where you'll start to get so much negativity around Ferrari's brand. Ferrari's management team is going to hate that. That's going to be a whole situation to deal with. And so the moral of the story is here in regards to race, it's not looking great. The good news is for race is they always have a certain amount of customers that will buy every single new Ferrari that comes out, because they don't want to basically like go down in the list to get the special allocations. But I think because they missed so bad on this F80 that I actually think customers might not be as incentivized as in the past as far as trying to keep on those lists, because they're looking at the F80 and like, this isn't even really that special. Like, what are we like? We're spending $10 million, $20 million on Ferraris over the years, all to get a Lego car. Like, what is this, man? So that's just something to kind of keep with a V6. Like, a lot of people are not excited about that car. So that's something to keep in mind there. Now, there's a bigger problem in general out there, and this is luxury brands have been kind of struggling the last few years. Like, this is a 4.5-year chart for LVMH, Louis Vuitton, right? And what we find here in regards to Louis Vuitton is this stock in the last 4.5 years, roughly, is down 20+%, right? That's a very weak performance for that stock overall. I believe also Rolex prices have started to go down on the far majority of models, have gone down substantially in the past few years here, with only the very most rare models really holding value. So you've got a problem with luxury. And this gets into a bigger problem we have in general here, right? Which a bigger problem in general we have is we have gold at all-time highs, silver at all-time highs, a stock market at all-time highs. We have crypto at all-time highs. Even like international stock markets for the most part are all at all-time highs right now. And yet vehicle sales are not, that great. Luxury sales in general for handbags, luxury sales for watches, things like that are having a lot of trouble here. Home sales are having trouble even on the high end. High-end furniture is having trouble. Look at RH stock for a perfect example of that. So we have a weird, very strange thing going on where the rich are richer than ever, right? The top 10% of the wealthy, right? Richer than they ever been. But yet people aren't feeling like, I want to go buy a new Rolex, I want to go buy a new Ferrari, I want to go buy a new house, I want to go buy new furniture. So we're in very strange times right now where a lot of those spending numbers are not great. So I don't know what to think, and I don't know why that is. I really don't know why that is. Like, why is it, people are richer than ever, but they're not really out there spending like it? And my guess is I think real estate matters so much to the psychology, especially in the United States of America. And I think because real estate prices have started to trend down across countless cities, across the United States now at this point in time, and real estate sales numbers have been, pretty much a great financial crisis numbers. I think it matters a lot to the psychology of even a high net worth individual, right? That maybe has $15 million, in a net worth, but they kind of don't feel like going and spending, $25,000 on a new watch right now, because they're just looking and they're like, I think real estate matters significantly to psychology. Now, you could say interest rates maybe matter a bit. I don't know. Like, I think a lot of these high net worth individuals, they don't even care about, you gotta understand, like, for a lot of the top 10% of wealthy, interest rates are almost irrelevant, because when they go to buy a new car, they buy it cash. When they go to buy a new house, they buy it cash many times. When they go to buy new furniture, they buy it cash. When they go to buy a new $25,000 watch, they buy it cash. When they go buy a new Louis Vuitton handbag for $5,000, they buy it cash. They're not like, oh, let me take out a loan to do that. That's not what high net worth individuals really do. And so I can't blame it on interest rates. If anything, the only thing I could think is real estate. And that weakness is just leading to a weak psychology of higher net worth individuals where they're just, But then again, if you miss on these products, I heard Lamborghini's also, not in the best situation right now as well in regards to selling their SUV. That was very hot a few years ago, is turned ice cold from what I've heard now. The Temerario, I heard, isn't all that. The Revolto's pricing's crazy. So I don't know, man. It's a weird time. By the way, as far as the other potential hedges I have on here, PLTZ, that's one I currently have on. I have Walmart as a potential. I'm going to probably take that guy off, though. Tesla, definitely there, but I got more TSLZ there. Wingstop is something I looked at, but the Wingstop's come down a lot now. So Wingstop's not as interesting as it was, man. I was looking at that one back here at the end of 24. I missed it. It doesn't mean it can't go down more from here as far as Wingstop goes, but in terms of the big opportunity in Wingstop, I missed it, man. So now I feel like I'm chasing smaller money if I go against Wingstop now. See, now the forward P is down to 40 on Wingstop, right? If they continue to grow a lot of locations and grow restaurant sales, like a 40 is not insane. Now you can say maybe it should contract more, maybe go down another 10, 20%. That's possible, but the biggest money's been missed, man. I should have got in that one. I looked at it back around that September time frame. I was really considering hedging against it. It was 400 plus at that time, and gosh, I missed it. It is what it is, right? Palantir, we already talked about that one, right? Hood is interesting, but Hood I can't step in against yet. Hood's scary, man. And the reason Hood's scary is they got this relationship with, from my understanding, Kalshi, which has been blowing up as far as like a predictions market for betting on, like almost like betting on sports events and whatnot and other different events. And from my understanding, like Robinhood's making very small amounts of money on each one of these deals, but it's like there's so much volume going through that it could end up benefiting Robinhood's base in a substantial way. It could get a ton of people to use Robinhood as well. So Robinhood's actually what I'm scared to bet against right now. I have it on my potential hedges watch list, but that one's scary. Palantir doesn't scare me. I'm like, okay, maybe they have one more quarter where they accelerate that growth, but then growth, stops accelerating from there or has trouble. Tesla doesn't scare me at all, not even remotely. But Hood scares me, actually. Hood scares me. That's the one I'm actually scared to step in because I'm like, dude, like so many people love to bet on sports and that Kalshi's been just blowing up. So I'm a little worried in regards to that one. Costco could make an interesting hedge. That one I already went to battle against and I beat it, but it's a tough one to go against. All right, let's get into Tom Lee.
Scott Wapner live from Post 9 here at the New York Stock Exchange. This Make or Break Hour begins with high expectations for stocks and why 7,000 for the S&P might be conservative before year end. That is the call today from Fundstrat's Tom Lee. You will hear from him on this program momentarily. In the meantime, we'll show you the scorecard here with 60 to go in regulation. A steadily deteriorating kind of trading day, really. Green to start, red now. Dow's down about 2/3%. S&P negative, so is the Nasdaq. Most sectors are red, including tech, though Nvidia and Meta, well, they've been positive throughout the session. They still are. We'll watch them both. Prior show was talking about Ferrari today. Robert Frank just was getting dented big time. Weaker than expected outlook means the stock is now tracking for its worst day ever.
Getting dented, that's kind of funny.
It's down 15%. We'll follow that. And how about shares of Lowe's today? On pace for their 9th straight down day. Just a brutal stretch. Home Depot not doing all that better. Not quite the same losing streak, but nonetheless, it's one to watch.
I gave a message out to my private stock group members. I think, on Monday, actually, right? And I said, you know what I said to them? I said, this market looks really weak. I said, I understand, Monday was filled with all the AMD excitement and hype and things like that, right? In the last few days, honestly. But outside of that excitement, I think the market would have been red every single day this entire week. Like, literally, if that AMD deal did not go through and that didn't lead to so much hype and excitement around not only AMD, but the AI trade, right? The risk on stocks, all that. I think every single trading day of this entire week would have been red already. Every single one. I kid you not. AMD and that deal bailed out the whole flip and flapjacking market because that gave so much momentum to the big tech stocks. And those ones drive the whole market. The semiconductor stocks, those ones drive the whole market. And it just gave like a breath of fresh air. But when you look, man, there's just so many of these stocks they're just down and out. Like, let's go ahead, pull up my possible buys watch list here. And you see, look at RH. Look at how dead this stock is. Look at Whirlpool, $74. These stocks are like just getting hammered right now. And it makes you say, is there a big downdraft coming in this market still? Or are we going to have a 2018 happen? I don't know. Maybe we don't. But we're seeing some of these moves. I'm like, he talks about Lowe's. Lowe's isn't a stock I usually track. But he talks about Lowe's down 9 straight trading days. 9? It's not like the market's been bad. Imagine the market actually starts to go down. What are these stocks looking like then?
It does take us to our talk of the
That's the scariest part when you're talking about a stock that continues to get hammered in a green market. You have to ask yourself, what happens if this market turns red? What happens if we lose 10, 15, 20% in the S&P 500? To these stocks that have been like getting wrecked as it is, what are they getting then? That's scary.
Hey, the rally's road ahead. I mentioned that call from Tom Lee. He does join us now. He's a CNBC contributor. It's good to have you back. Welcome.
Great to see you, Scott.
So what do you make of just how the market's trading today? We've had a nice run. It's given a little bit back. Maybe some concerns are out there about the strength of the economy, the labor market, some other stuff. What do you see?
Well, I think we are trying to balance a few things because we are navigating a little blind because of the government shutdown. But we also know that the real powerful drop.
No way. No way. Is this Tom Lee's office? I've never seen Tom Lee, be in this space he's in. But do you guys see what I see? There's a bed in there. There's a bed. And it clearly looks like an office space because there's a woman working back here and a bunch of filing cabinets and stuff. The man's got a bed in his office? What?
Driver of the equity market and the economy has been AI, which is not affected by this slowdown. So I think stocks are in this sort of zigzag pattern, but given we're in that seasonal period from October.
I'm not going to lie, if I was single and didn't have a family, could I sleep in my office? Shoot, I might.
October to year end, and we think the S&P can get to at least 7,000. It has been, and we've seen it this week. These pullbacks get bought, so we could be weak today, and I think we could rally tomorrow. And in general, I'd still be bullish into year end.
Are we whistling past the graveyard, Tom, on anything that could be concerning to you? I see a story right in front of me from Axios mentioning a Moody's analysis. 22 states are in recession or close to it.
Wow.
There was that
Big
Carlisle independent survey the other day showing the labor market is much worse than expected. Gold's been going up. Some suggest that's de-risking from.
Oh, wait, before we go further here, yeah, gold. Gold being so strong does kind of look like maybe that's a play that the market could get weak. But keep in mind, from what I remember in the Great Financial Crisis, I'm not calling this Great Financial Crisis. I'm just giving this as an example, okay? But in the Great Financial Crisis, from what I remember, gold rallied heavy into it. But if I recall, when the market actually started to go down significantly, gold fell as well. From my understanding, from what I remember, everything fell. And I had an accounting instructor, my best accounting instructor, who took me through 3 different levels of accounting over like a year and a half span. He was a gold bug. He loved gold, but gold was getting hammered during that situation as well. But there was something else in regards to that situation that I was about to bring out here. Let me go back here. It was an important
analysis. 22 states are in.
Oh, that's a really important point. I never really thought about that. You look at the United States in whole, or is the United States in a recession or not, right? But look on a state-by-state basis. I gotta say, listen, my state, Nevada, I can make an argument that we're in a recession right now. Like, I don't see any good activity out there. The strip numbers have been horrible strip numbers, right? Which, we're a very tourism-based economy. We obviously have, a huge segment outside of tourism nowadays, but tourism still matters significantly to Nevada because Las Vegas and Las Vegas Strip and what that can generate, right? And so Las Vegas Strip numbers have been horrible. Housing numbers are still bad out here in regards to it seems like hardly anybody's buying homes. So I wouldn't be surprised if Nevada was actually in a recession right now, just to be quite frank.
Recession or close to it. There was that Carlisle independent survey.
And then the Reno area also heavily counts on tourism as well, right? It's a different type of tourism for Reno. It's not as serious as Las Vegas, obviously, but it is still people coming from other states and other areas to go to Reno.
The day showing the labor market is much worse than expected. Gold's been going up. Some suggest that's de-risking from the U.S. AI bubble. You mentioned the shutdown. Are we complacent towards any significant risks that we might be missing?
Well, I do think markets are less skeptical than they were in April and even in August and September, and we can see this in both positioning and AAII. So I think it is fair to say that the markets have priced in more good news. So the things you flagged can be worrisome. But what I'd point out is that I think the AI story is actually strengthening, Scott. From our conversations with both companies and investors, it actually seems like the payback for AI, whether it's applications or services or companies' actual ROI, actually has improved in the last quarter or so. So I think that's what's helping actually create demand for spending. So I think we may be underestimating the sort of profit creation coming from AI. And I think that's why there's still legs to that story. But you're right. On balance, the data is mixed and we don't really know because we don't have government data.
Yeah. You gave our producers this line that you still think it's the, quote, most hated rally. And I've asked you about this every time you've been on with me. I feel like now that's a little bit far-fetched to suggest that this is still the most hated rally. I don't find anybody who comes on, certainly not on the programs that I do, that is overly negative about anything. The prevailing view, even from those who were cautious before, are like the stock market's going up.
Scott, listen, in all due respect, sir, let the S&P 500 go down 4%. 4%. And watch how many people come on your program and start talking cautiously, start talking bearish. Let it just go down 4% and watch the switch. When the market hits all-time high after all-time high after all-time high, week after week after week, the people that have a bearish feeling are going to be scared to express it. The same way, at the end of 2022, people were scared to express any sort of bullish sentiment. And it seemed like just about every single person that went on CNBC and probably spoke on Scott's program, and a lot of them we reacted to, right? Guess what? They sounded bearish. They sounded negative. They sounded cautious. They sounded worried. They sounded scared. But that's because the market had been in almost a year-long downtrend. That's all it takes. And like I said, just have the market go down a few percent and watch how fast they switch. Let the S&P 500 go down 14%. Not 4%, 14%. And then watch the panic. Watch the overwhelming negativity start. Because then even the bulls start to pull back and they stop commenting as much, right? Even the Tom Lee start to talk with more cautiousness. I've watched Tom Lee for years. All of a sudden he starts talking real quiet and, well, Scott, when we're in a raging bull market, it's very easy to talk very confidently, but let that market get hit. And I'm telling you, a lot of these guys will switch quick, right? The bulls will start being quiet or even a little cautious, and the bears will get loud and proud.
Higher. Now, it may end poorly way down the road, but it's going higher. So how can you suggest that it's still so hated?
Well, there's this thing where people can make like a backhanded compliment. Like they might say something positive about the market, but they're really bearish. Because when I hear people say, oh, well, this reminds me of 1999, or, they're ringing the bell on the top of AI stocks, they are maybe acknowledging that the market is strong, but then they're trying to mark the end of that rally. And yes. I think, True. For me, who was an analyst in the 90s, people forget that Cisco in September 98 was almost a 60 PE when the Fed made its first cut in 9 months, and then its PE went to 200. NVIDIA is that stock today, and it's trading at around 27 times forward earnings. I mean, it's got a lower PE than Walmart and Costco, which are like 35 to almost 50 times. So I just think a lot of good news has been accepted by markets, but I don't think it's necessarily priced into markets.
Tom, give me a sec. I'm going to come back to you in a moment. I got some breaking news I want to get to Eamon Javers with. Eamon, what are we learning here?
So I don't know what Tom Lee's looking at here, because we have a forward P 48 here on NVIDIA. We got a 2-year forward P of 31. So, interesting. Interesting. So maybe he's talking about the 2-year out forward P. I'm not sure, but that's interesting thoughts there. But Tom Lee, overwhelmingly bullish, as you might think from Tom Lee, but like I said, things can switch quick. All you need is a market to get a little weak, and there you go, right? Now, in terms of what I added here today, I added some more to my Tesla hedge here today, which is TSLZ. That's a 2x, basically inverse ETF against Tesla stock, essentially, which is up to over $20,000 position here. So now my plan is with this, maybe add to from here and there if I see opportunities where they can continue to weaken as far as Tesla stock goes. And then, that one I really like, kind of going against that one right now as a hedge. Because at the end of the day, like if this market gets hit in any substantial way, we know Tesla's going to get absolutely slammed. Like, it doesn't take a lot. When you take this S&P down, 7%, I wouldn't be surprised if Tesla goes down 15 to 20%. 20% is probably more realistic. Like you send the S&P down 7%, I think Tesla probably goes down 20%. On a 2x leverage ETF against Tesla, that's probably like a 40% move there, off of a 7% downside for the S&P 500. So when people are like, why are you doing this against this stock? And, because if all it takes is, my hedge is against the market in general, just in case this thing goes south, right? And, I'll be able to save some face there and then go ahead, stick that money in stocks at much lower prices. Like, I love a lot of stocks out there, current valuation, send the S&P 500 down 7%, there's going to be even better deals out there, right? Send it down 11%, send it down 15%, even better deals. And, 15% downside for the S&P 500, Tesla stock could be down 40% in that. Like, that wouldn't be crazy at all. And so you could be looking at, appreciation of 80% or so, 70, maybe to 90%, somewhere in there roughly. It's not a perfect in terms of the, compounding on a daily basis and those sorts of things, the moves on a daily basis. But the moral of the story is here, I like this as a hedge. Of course, if the market just continues to go risk on, Tesla's probably going to get pulled up in that as well, which that's the risk you're willing to take when you do a hedge. And that's why I always hedge with smaller amounts of money. I'm not going to risk the farm on hedges, right? But, if the market continue to go risk on and just up, I would probably go a little heavier in regards to going against Palantir and against Tesla. and then let that game play out. But if the market gets weak, I'll cash out of these with big profits, and that'll be it. I'm not playing these because I'm like, oh, the stock market's going to go around 50%. No, it's not happening. But could I see the market go down, 10 to 25%? Somewhere in there roughly? Yeah, sure, I could see that. And that's where these come in handy, and the moves would be dramatic in terms of the profits I would make in that sort of environment, right? Alrighty, folks, I appreciate you. I hope you enjoyed today's video. If you're looking to join my private stock group, private wealth group, as well as get access to 1000xstocks.com, that will be the pinned comment down there. Let's get you from gambling the market, start taking this stuff serious, and you will send your Steel membership cards in the mail to your house. You put them in your wallet. Beautiful. And then if you ever see me in person, you can say, Jeremy, I'm a member, 1000X, baby. I'm a member of the private stock group, or I'm a member of both, right? Big flex, okay? And if you're wearing a 1000X Nike hat at the same time, by the way, if you're wondering, how do you get those hats? I just started recently. I send those out when somebody hits 7 figures. We send them a 1000X Nike hat as well. So, I just thought it was kind of something cool. All right, guys, much love and have a great day.